Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, factor and core equity strategist at Invesco, with reaction to the 25 basis point rate hike that we just got at 2 p.m. Eastern. Of course, we will dissect what Fed Chair Powell is saying and why the markets are reacting the way that they are. Ryan, it's great to see you as always. Welcome back to Trade Talks. Before we get into the reaction to the to the rate hike, how has the Nasdaq 100 performed over the last week? I mean, it did have a really nice start for the year.
Yeah, it did, and you know we sort of kept that up. Another good week for QQQ and QQQM, up 2.16%. That outperformed the S&P 500, which was up just over 1.5%, and S&P 500 value, which was up 1.64%. You know, we saw some optimism around earnings. We saw kind of the debate about the prospect of a potential soft landing, but you know, a lot of this week was sort of the lead up to today.
Right, and Ryan, of course, anytime you get these announcements, particularly when the press conference starts, you get these extreme moves. You know, we saw after the rate hike was announced that markets sold off just a bit, but around 240, 245-ish, they just took off to the upside. It appears from what I can see is that they don't expect, or they don't see any incentive to really tighten any further or change their stance on that.
Yeah, there was sort of a lack of pushback against that notion in the press conference, and to your point, I think it was right around 246, 247. You can see it on the daily chart. We saw a very significant move to the upside for Nasdaq 100, and you know, it seems as though the markets, you know, this is something that we've seen multiple times for Fed meetings, right? We've kind of seen markets either sell off slightly or kind of stick around the same levels until the press conference starts, and that's kind of where the fireworks, so to speak, begin. But you know, I think when we look at on the whole, you know, the Fed announced the 25 basis points, as you mentioned. It's the second consecutive slowing of hikes after a 50 basis point hike in December, and the target rate is now sitting at 4.5 to 4.75%. You know, from that, I think it's kind of interesting to note FOMC is talking about inflation easing, which that differs a little bit from previous comments when they're talking about elevated risks to price growth. So that's one thing that folks seem to be latching onto here. From the press conference, you know, talked about restoring price stability. That's going to require maintaining a restrictive stance for some time, and noted that ongoing hikes are going to be appropriate. Excuse me. I think he reiterated that point at least 3 times. You know, the huge move again. You know, I think it was built off of no pushback on some of the questions around easing conditions, and he also made mention that the disinflationary process has started. First time the Fed has noted that, but is watching core services ex housing as an area of focus. You know, reiterated some of the stuff that we've heard before. Reducing inflation is going to lead to a period of below growth trend and some softening of labor market conditions. And you know, again, you and I have talked about this for months. I mean, we just haven't really seen the labor market roll over. You know, job gains, labor market remains very tight per the Fed. We saw that with the data last Thursday. We saw initial jobless claims coming in under 200,000 for the second consecutive week. That was at 186,000. And despite the ADP employment change for January missing estimates, you know, the JOLTS job openings climbed to over 11 million. So, you know, I think there's still going to be this kind of debate about, you know, slowing inflation and whether or not we're going to see that upward pressure maintained from the labor market. It's clearly something that the Fed is keeping a close eye on.
Yeah, I'm just looking at a headline now. If economy performs as expected, don't see 2023 rate cut. I'm looking at headlines out of Bloomberg as we're speaking, so you know, I'm sure the market is loving that. But to wrap up here, Ryan, if we take a look at sector performance, what contributed to, you know, the optimism that we saw in the last week in January?
Yeah, so you know, I think when you're looking at QQQ versus say the S&P 500, almost all of the outperformance of the past week can be attributed to Q's overweight to the consumer discretionary sector, and that sector's outperformance of its counterpart in the S&P 500. It traded higher by 8.18% in QQQ versus 5.4% in the S&P 500. And then from a single security perspective, Tesla's advance of over 20%, and it's nearly 2 percentage point overweight in QQQ QQQ was the largest contributor to relative performance. A lot of that driven by Q4 earnings, which were announced after the close on January 25th. EPS and revenue that beat analyst expectations. As we've seen, there's been a lot of focus on guidance to the extent that companies are issuing forward-looking statements, and they kind of reiterated the long-standing goal that they have of increasing or growing over 50% over the course of many years. Initially, Tesla had talked about production of 1.8 million vehicles, and during their call, Elon Musk kind of teased out that this notion of production of 2 million vehicles is possible, and that was in response to some questions around slowing demand. He noted that the demand is coming in at twice the rate of production since the company cut prices on some of its models 3 weeks ago. So earnings is going to continue to drive markets here. I think it's served as a bit of optimism, and tonight we have Meta reporting after the close. Tomorrow we have Apple, Amazon, and Alphabet. So will be interesting to see any sort of forward-looking statements that these companies make following Tesla, and of course what we saw from the Fed today.
Yeah, and we have jobs on Friday as well, so it's like the Super Bowl week for the markets here, Ryan. All right, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.